Hello traders, this is Rich from Tradesight. This is a look at our market preview for the coming session. This is going to be for Tuesday, July 16th, 2013. The market recorded a fairly positive day across the board here. Not a lot to show internally to the positive side, but it was just another day of upward prices without a whole lot of pressure. We have the S&P is up by 7 handles, the NQ is up by 11, and the Dow up higher by just 19 points. But all in all, fairly decent day. Most of the commodities were a bit lower on the day. But let's move on and take a look at the major commodity indices and take a look at the ES minis first. All right, so here's a look at the ES futures. The ES futures closed at a new high on the move. Also made a new intraday high on the move. Most of this came from a gap. So while it was a positive day on the chart, there wasn't really a whole lot of upward pressure on the market after the open, but a positive day nonetheless. Key overhead remains at 1687.50. To the downside, 1656 and a quarter is going to be the 5/8 level, followed by the rising 10 EMA at 1647. On the Nasdaq side, the Nasdaq futures are up 11 on the day. Kind of a similar situation where most of the price gains came from a gap to the upside. To the upside, there's going to be a new key level overhead, 3125, which is 8/8 level, and obviously well above where we are right now. To the downside, the 7/8 level at 3046 remains first support. Then we're going to have support coming in at this gap window, which is also the high opens where price was rejected here previously. That level is coming in about 3026, 3027. All right, now take a look at the NDX versus the S&P. You can really see how the NDX has come on strong. The NDX is really starting to push above the prior high. That's the white line. The red line representative of the S&P, the broad market, is just now starting to catch up. When the Nasdaq can lead the broad market, that can be a very, very powerful condition, and definitely something that that we don't want to fight. So as long as the NDX can maintain its superiority over the S&P, we could see a pretty good rotational rally continue. All right, so here's a look at the SOX divided by the NDX, because the NDX leading the S&P is very positive. Today we didn't really have that condition present. The SOX really kind of lagged the NDX, so we really want to see that we hold above this key breakout line and can start to add on to this. If we can add on to this, we can definitely see higher prices in the NDX. If the S&P continues to trail, that will definitely be a real negative influence on the overall NDX, since the SOX is so very important, and especially since the SOX tends to lead the S&P, or the NDX rather. Here's a look at the multi-sector daily chart. You can see that the XAU continues to lag and is really just kind of been wrung out here. Possibility of setting up a higher low cannot be ruled out. Just need to break above this current level. The best performance on the day came from the banking index, the BKX. The SOX, which is the blue line here, did very, very little. BTK is still performing fairly well and definitely important to the overall NDX. All right, here looking at the total put call ratio. The total put call ratio is basically pretty well contained here between the oversold and overbought reversal threshold, so nothing really to worry about here from this key indicator. All right, the other key internal that we want to keep an eye on is the 10-day trend. The 10-day trend did roll to the downside today, closing at about 0.96 or so. So we're definitely getting fairly close to this key overbought reading of 0.85. That's the green line here on the bottom. If and when we do hit that key reversal area at the 0.85, we're going to look for price to return to the mean here and reverse to the downside. All right, taking a look at the individual sectors. The utilities were the top gun today. Airlines were strong. The defense index was pretty hot. Banking index was fairly strong, but there's a couple notable laggers here. The housing sector was very, very weak again. We're 13 days now, 13 days down in the countdown phase of the seeker, so we could see reversal back to the upside at any point now. The OSX was fairly weak. Oil and gas was weak, and the gold and silver and the SOX, as we talked about, were also weak. The pharmaceuticals were also weak. There's some news coming out of China involving some investigations. So definitely be ready for that to move prices tomorrow. So let's move on and take a look at some of the key sector charts. Here's a look at the Dow Jones Utilities. Broke decisively above the 50 DMA now. Next level is 5/8, which we almost touched today. Then the 6/8 level at 515.5. Then there's a key level coming in here that won't be apparent to a lot of players. That's going to be this active static trend line at about 519.5 or 520. So definitely be ready for that if and when it happens. BKX made a new nominal high, but it still has an active seeker exhaustion in place here. Here's your 13. This risk level is the magenta level, which also lines up with that plus 2/8 level at 65.5. So the onus is still on the bulls here to keep this going to the upside. Be prepared for a reversal if we close back down below the 10 EMA and follow through to any small degree. The BTK was kind of middling today, up about 1.3%. So really kind of just an inside day here. Got a big level coming up here at the 8/8 level at 2250. So if we do get up to 2250, we could see some initial exhaustion here and be ready for a reversal to the downside if and when that happens. SOX index was playing with the risk level from the seeker exhaustion. Seeker count was fairly flat. We did break above the risk level, so that is now nullified. So the seeker count down to the downside is now nullified and now void. Here's a look at the SOX, the Philadelphia housing sector. We did get our 13 exhaustion. We're trying to pivot back to the upside. We're obviously decently above the 20 and the 200 period moving average. Just really need to get back above the 50 here to get the 4/8 level in play at $200. Gold futures on the day were pretty much contained within the previous day's session. We really haven't done too much since we had that gap up quite a few sessions ago earlier last week. Right now we're still kind of slugging sideways. We're short-term positive right now, just on a bounce basis at least, because we're above the 10 EMA. If we take that out, this 1312.50 is the first area, and then the 50 DMA at 1347 is going to be coming into play. To the downside, if we roll to the downside, the 0/8 level at 1250 is going to be key support. Now here's a look at the oil futures. Oil futures are still kind of just kind of poised in here, just trading the same area back and forth. Can't get above 106.25. If we do that, we're going to put the 7/8 level at 109.375 in play, and then that key level at 8/8 at 112.50 is where we're likely to wind up. To the downside, key support remains at this little range low, which is also consistent with the rising 10 EMA that comes in right about 104. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.